Hey everyone, it's Connor here with the first edition of the Uranium Weekly Bulletin. This week we have a couple of big stories that many of you are probably already aware of, and also a couple more niche ones. So regardless of how committed you are to the industry's news, hopefully you pick up on a few new details. In future weeks, I hope to do a wrap up of the week's price movements, but for the time being, I'm just going to be sharing a couple stories to nail the basics. To start with the biggest news first, Sprott launched their physical uranium trust on the Toronto Stock Exchange. On July 19, Sprott Asset Management announced that the conditions for its arranged takeover of the Uranium Participation Corporation had been satisfied, and that unit holders of the latter would become unit holders of the newly created Sprott Physical Uranium Trust. On the same day, shares for the Sprott Physical Uranium Trust, which is generally just referred to as SPUT, began trading on the Toronto Stock Exchange under the ticker U.UN for Canadian dollars and U.U for US dollars. The announcement comes ahead of the widely expected third quarter launch of Sprott's at-the-market physical uranium purchasing program, through which they will be able to issue shares at a premium above the previous day's net asset value and then use the net proceeds of those sales to acquire physical uranium through the spot market. Berkeley Energy's proposed Retortillo uranium mine, also known as the Salamanca project, in western Spain has been blocked by the country's Nuclear Safety and Radiological Protection Regulator. The Nuclear Safety Council said it took the decision due to a lack of reliability and a high level of uncertainty over how radioactive waste would be stored at the facility. In the day following the regulator's decision, Berkeley's share price on the ASX, where it trades as BKY, plunged roughly 50% to 31 Aussie cents. On the 23rd of July, Berkeley, which strongly refutes the regulator's findings, announced that it had taken the first steps towards overturning the decision by providing the regulator with an improvement report which they claim addresses the issues raised. They have also been alerted that a hearing process around the decision has been opened up under Spanish law and will require them to submit documentation by the 4th of August. The proposed mine was slated to be capable of producing an average of roughly 4.4 million pounds per year at a total cash cost of approximately $15 and 6 cents per pound. International Consolidated Uranium, which trades on the TSX as CUR, has entered the US uranium industry by signing an asset purchase and strategic agreement with Energy Fuels that will see them acquire a portfolio of conventional projects in Utah and Colorado. In their investor release, the company notes 3 fully permitted past-producing underground mines as highlights of the deal. The Tony M mine and Danaros mine, both of which are located in Utah, as well as the Rim mine in Colorado's Uravan mineral belt. An additional agreement to be executed on the closing of the transaction will also see International Consolidated Uranium become the only US developer with guaranteed access to Energy Fuels' White Mesa mill, besides Energy Fuels themselves, of course. Bannerman Resources announced that they will be raising $2 million Australian dollars worth of new shares to buy back and extinguish private revenue royalties for its Etango uranium project in Namibia. Resource Capital 4 and Resource Capital 6 received the 1.5% royalty, or 0.75 gross revenue royalty respectively, in 2015 as part of a restructuring transaction that aimed to deliver a significant project ownership and balance sheet restructure. Bannerman Resources Managing Director and CEO Brandon Munro said that given the transformative benefits of the Etango 8 project pathway, it was logical and compelling to streamline the development process by removing RCF funds royalties, and that the decision would be value accretive for shareholders. Okapi Resources, a mineral exploration company listed on the ASX under the ticker OKR, announced it will be entering the US uranium space through an acquisition of Tallahassee Resources. Tallahassee Resources' portfolio includes the Tallahassee Uranium Project in Colorado, which holds a resource of 26 million pounds of U3O8 according to a resource estimate under the 2004 JORC code, as well as an option to acquire 100% of the high-grade Rattler Uranium Project in Utah. Okapi provides the rationale behind the decision in their investor release, listing electrification of the global economy, the US government's embrace of the domestic nuclear industry, growing uranium demand from non-OECD countries, and a tightening of the uranium market's supply and demand fundamentals. The South Korean Ministry of Trade announced that the country would resume normal operations at 3 nuclear reactors that are currently undergoing maintenance in response to upcoming heat waves, which are expected to cause power surges and potentially power outages. South Korean journalist Kang Jae-young, who reported on the story in the Korea Herald, confirmed that the 3 nuclear power plants the government is reopening this week are Shin Wol-song 1, Shin Kori 4, and Wol-song 3 on the country's southeast coast. South Korea currently operates 24 nuclear reactors, providing about 1/3 of the country's electricity, with 4 additional reactors under construction and planned to come online in 2023-24. That's all the news I have for this week, guys. If I missed anything big, feel free to share it in the comments below. And if you see any interesting news over the next week, particularly if you're very active in the New York Stock Exchange or the Toronto Stock Exchange, feel free to send it through so I can include it in the next bulletin. Have a good one, guys. Cheers.